Yeah, still playing the cat and mouse game here, Paul. They did stop short of actually raising the offer, but yes, you're right. They are offering now this almost $1.80 per share to cover the termination fee with, the Netflix deal as well as some of the financing costs, and then of course, as you just mentioned, the ticking fee. I don't know though if this will necessarily fly with the Warner Brothers Discovery Board. I think this is just Paramount exhausting all of its options before, they actually raise the bid. But in my mind, what this signals is, yes, they did stop short of actually raising that $30 bid, but I do think that this signals that they are willing to kind of go back to the table and probably raise that bid as, this thing keeps dragging on.
Yeah, it does feel a little bit silly given that David Ellison had said that $30 a share was not their best and final offer. So
Yeah.
let's kind of get to it. That begs the question, Geetha, and this is a dumb question. Do they have the money to raise their bid?
They do, but the question is really going to be what happens after Scarlett. So, right now we're looking at a company with the $30 per share bid. We're looking at a company that's going to be levered about 6.5
Whoa.
times. They raise that bid to, let's say, 32, 33, 34, whatever the number is. You're going to look at a company that's going to be levered at about 7 to maybe 7.3 times. What happens with those dangerous levels of debt is, it just becomes a distraction. You're not going to be able to invest in growth. You're just going to be focused on deleveraging. This is exactly what we've seen, happen many a time in the media world. It's happened actually to Warner Brothers Discovery itself. They had over $50 billion in debt, and the only thing that they were hyper focused on is, okay, how do we keep, reducing that debt pile? And so the biggest worry is that's what's going to happen to Paramount. So yes, they could get their hands on this absolutely world-class asset, but yes, leverage becomes this huge, huge headache for them.
Geetha, any sense of timing? It doesn't seem like either side feels the need to, I don't know, be aggressive here.
So February 20th, that's the date that Paramount's proxy bid actually expires. It was initially Jan 20th. They extended it to February 20th. So that's the $30 hostile bid. That's the date of expiry. Remember, Paul and Scarlett, only about 7% of Warner Brothers shares to date have been tendered at that $30 bid. So everybody's still kind of holding out for that higher per share offer.
I think that tells you everything you need to know right now then. February 20th is the day we'll watch for. Geetha, let's also talk about Spotify here. It added a record number of users, 38 million users, to 751 million, topping analyst estimates. How much more room is there to raise prices? Because increased prices in the U.S. was certainly part of that story, and it looks like consumers continue to sign up.
Consumers continue to sign up. Yes, we're seeing Spotify. I mean, if you just look at their subscriber trajectory, Scarlett, over the past few years, they've added about 28 to 30 million subscribers every year, and there's just no signs of slowing down. They keep adding record number of subscribers, record number of active users quarter after quarter. So there's just so much of appetite for this platform, for music in general, for audio in general. So that is definitely good news. You talked about pricing power. I think, just with kind of the user interface that Spotify offers, with all of the content that it offers in terms of breadth and depth of content, and as they keep adding more enhancements, they do have a lot more leverage to keep raising those prices. So, they've made a pretty bold move by raising their prices a little bit earlier this year. So now it's $13 for an individual plan in the US. That was a little bit above the rest of their competitors. But then we just saw a few days ago, Amazon Music also kind of raising prices, which then I think just speaks to the audio industry in general. I mean, everybody there has a lot of pricing power, but I think Spotify definitely has the most, just kind of, again, given the fact that they are a best-in-class product.
Stock's up 19% today, the most ever as a public company. So the market certainly likes the results.